All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Let's go and continue with our 30 indicators in May series. We're going to go out and talk about the ADX here today. Before I do so, my comments on the market and on what's going on are in the last video. Also, put a little comment in the message stream there for you. But we talked about this 2,900 level on futures coming into play, and yeah, there we are. We're coming up into that area here, 2,900 on futures. Now, this is due to comments out of the White House that are directly designed to push the market up, which, okay, interesting. Interesting. It's not the first time we've seen the White House play stock market. It will not be the last time. And it's just a different dynamic, very different dynamic here. But let's go out and talk about the ADX. We've taken a look at the RSI. We've taken a look at the parabolic SAR, the other Wells Wilder indicators. But this ADX is perhaps his best. And not because I use the indicator or love the indicator or apply the indicator in any way, shape, or form, but because of the story that it tells. And the reality is, while I don't use the indicator, the methodology of the indicator is what I use as the basis for a lot of my trading. The stories that the indicator tells in terms of the ADX are really good. They're really good stories. They're things that you need to know before you make a trade. I just find the ADX entry exits are a little clumsy, and you can get the same story now with some newer indicators without having some of the clumsiness of the entry and exit. And I'll show you how the indicator works. I'll show you what I apply rather than the indicator. So let's come in. I'm not going to go through the calculation of these indicators. That's just not very fun. But you can grab that. It's all over out there on the internet. Just put ADX calculations. But in here, I'm going to put the ADX with the DI and the DI minus or minus DI, and then just the plain old ADX. And you'll see the difference, right? In our top indicator, we have 3 lines. In our bottom indicator, we have our a singular line. The idea behind this ADX indicator is a measure of trend, to show whether stocks are in a mode of trend or in a mode of consolidation. That's the point of the indicator. A very good point. And a very good story to tell, and a very needed story to be told in order to trade effectively. This 20 mark is what Wells Wilder used as his key level. He said, look, when the ADX is above 20, the stock is in trend mode. When it's below 20, the stock's no longer in trend mode. It's in consolidation mode. You hear me talk a lot about trend versus consolidation over the years, and you don't see me use the ADX for that, but I use other things. But the ADX is perhaps the first indicator that ever came out that spoke to this difference between trend and consolidation. And Wells Wilder used the 20 mark. Above 20, we're trending. Below 20, not trending. And said, okay, you avoid trades when they're not trending, right? You're not looking for trend trades on a ADX below 20. So in this case right here, for Adobe, are you looking for a trend? No. We're not really talking about something that's trending right now. And, let's face it, for the last month and a half, the stock price is about the same, right? It's had some chop up, it's had some chop down, but the stock price really hasn't gone anywhere. But it's one thing to say trend versus non-trend or trend versus consolidation. It's another thing to get the direction, right? It's if we get an indicator like the ADX, and I'll see if I could draw a semi-straight line with a mouse, which I can't. But here we go in February. The ADX is moving above 20, right? All right, we're moving above 20. Okay, here we go. This is where the stock price is right here. It's fairly simple to just look at the chart and say, well, the stock price is, the trend is higher or the trend is lower. But basically what Wilder did is he calculated this positive DI and negative DI. And that's what you see in this indicator above. The ADX is the black line, kind of, that looks like this lower black line. But the positive DI, negative DI. And the idea here is that when the positive DI crosses above the negative DI, that's a buy signal. When the positive DI crosses below the negative DI, that's a sell signal. That's the idea. That's it. It's very simple. It's one where the interpretation is very easy. The calculation, though, is not. The calculation is pretty complex with how he derived it. Pretty impressive. But it is one of these indicators where you're going to see a lot of whipsaws. You're going to see whipsaws over and over and over come through the indicator. Most whipsaws will happen as the ADX is falling. This is one of the things that, I think 20, okay, great, fine. But we notice something when it comes to the ADX. That when the ADX is falling, the stock tends to consolidate. When the ADX is rising, the stock tends to be in a trend mode. So 20, great, you can use that, but you'll notice when you look at your stocks and you apply the ADX, when the ADX is rising, generally the stock is trending. When the ADX is falling, like back here in March and April, generally the stock is consolidating. It's not always the case. It's not a kind of no-brainer there, but that it's the norm when it just comes down to applying the indicator to most stocks that are out there in the market. Now, one of the things that I've done here with the indicator over the years is I've played with it in terms of the time period. And can you get a longer time period? So here's a 28-day period for the ADX. And if you get a longer time period, do you see something a little bit different? You'll notice how the ADX line is a lot smoother now. Spends a lot more time below 20, right? And let's face it, it's not like, we've been talking about Adobe on monster trends, when it comes down to it. I mean, the stock is, it's up, but it's had a lot of chop here to it. But when you go and you make it longer, 28 days, 60 days, something of that nature, this idea of a rising ADX and a trending stock is much more valid. The idea of 20 is a lot less valid. So it's one where, okay, you get a little trade-off. You don't get fewer whipsaws. You still get a lot of whipsaws when it comes to the DI minus and the DI plus, especially when the ADX is falling. But you'll notice here, even the ADX is rising, and there are a lot of just chunky whipsaws all the way through it. But basically, what is the ADX doing? It's trying to show whether a stock has a probability of trend or consolidation going forward based on the mode that it's in. And then it's trying to give a directional read of which way that trend is going. Do you need an indicator for that? I mean, those are two of the best, things to come up with, but do you need an indicator for that? Stock's starting to trend higher low right here in January. Higher low, higher high. Stock's starting to trend. Do you have any question about the direction of the trend? Higher lows, higher highs. I mean, here we go. Higher lows or higher lows. What's the direction of the trend on all these higher lows? It's up. Higher highs. What do we know? We know the trend direction is up. Okay, here we start to reverse lower highs and lower lows. We know the trend direction's down. Now in January we start to switch back higher highs, higher lows. What do we know? The trend direction's up. Yep, we've come off a higher high. Now we have a dip. But are we at a lower low? No, we're not. right? Is this a downward trend? No, it's not. Could it ultimately turn into one? It sure could, but there's no lower high here. There's no lower low here. To come in and say, well, this is a downward trend, can't do. It just doesn't have that associated with it. But we don't need an indicator to kind of come in and look and say and identify the trend, this higher high, higher low, lower high, lower low element of trend. We can see that with the stock. So why do we need the indicator? Right? Why do you need the indicator? My experience with the indicator itself, individually, and I've taken it so far as to model different scans. I have a scan in here. Let's see. Maybe I took it out. But where every day would scan for ADX signals, where the ADX is moving above 20, where you have a DI minus and a DI plus crossover, and take a look at what happens to stocks after that type of scenario. Most of it was just inconclusive. You didn't see anything that was different from flipping a coin on the stock in terms of the performance of the stock after the signal. So I never, I used it, fine, great. I did find a little more value in terms of currency with it. But while I don't use it and I don't advocate using it, I advocate understanding the story and applying the story into your trading. And if that starts with using the ADX, great. That's a better place to start than 90% of the other indicators that are out there. Because if you're trading options or if you're trading for movement, what do you want? You want trend, right? Or you need trend for that to happen. The ADX is at least going to give you a little bit of an idea of, hey, that trend is happening. Is it more of an idea than the higher high, higher low basis of trend? No, it's not. It's very simplistic in how it looks at it, but it's a way to take an indicator and to tell that story. You think about the other indicators that Wilder put together, the RSI and the parabolic SAR, right? So you get something like this right back here, where, well, let me get the ADX back to its original form. Let's go back to 14 days here. But you get something like this, where the ADX is starting to chop higher, and it's in a bull mode, right? Where the positive DI is moving above the negative DI. You finally see that signal about right here. You're nowhere close to the bottom, right? On that, when you finally get that signal in. So you're kind of chasing a trend a little bit. Well, this is where you can apply that parabolic SAR, right? That we talked about yesterday. Where you take and you say, fine, okay, I'm buying it here. You'll notice the parabolic SAR switched on that day too. Coincidence? I don't think so. If you look at the calculations. But overall, it says, okay, yeah, you're chasing a little bit, but where's your stop level? Okay, it's all the way down here on the first day. Next day, okay, it changes. And you can ride it with that stop level or this parabolic SAR. You did get whipsaw day right here. Never any fun, but carried on forward after that. So, it's one where, okay, great, you see the trend is happening. Now that the trend is happening, this is where you go and apply the parabolic SAR to ride that trend. And the whole idea is, okay, now you can throw an RSI on there, relative strength index, and you can say, all right, are we getting into an overbought territory? Right? Here we're getting pretty overbought, so the chances of that trend coming to an end are significantly higher than what they would be otherwise. So these are the three Wells Wilder indicators, which are, he was the first one to take and use indicators to tell a story and to tell multiple stories, not just to say, well, buy here, sell there, all of that, but to be able to take and go, okay, here's my chart. I see what I see on the chart, but let's throw some statistical measures at it to see if we can tell a story. Well, let's see if we can do that with this 3 indicators right here, right now. What's the RSI tell us? The RSI tells us that the relative strength upward trend, or this heavy upward trend in relative strength, has come to an end. That's what it tells us. It's pretty neutral. The ADX tells us we're not really in a trend environment below 20. The DI measure with the negative DI, or the positive DI moving below the negative DI, tells us path of least resistance is lower, but since we don't have a trend, we're expecting this to whipsaw around. And it tells us, hey, since we don't have a trend, there's no reason to really use the parabolic SAR because we're not talking about a trend mode right here. So no need to get in, no need to use the parabolic SAR. That's the story it tells right now. Do different stocks tell different stories? Yeah, they do, right? So take a look at something like an IBM. What's the relative strength say? Well, the relative strength says, hey, we're in a different mode than we've been. It's a little more bearish than what it's been for quite some time. The relative strength has moved below that 50 mark. We're above 20 on the ADX, so there's a high probability of trend. And the DI, the positive DI, negative DI, it's squarely bearish with our red line above our green line. So it tells us, okay, this is a bearish trend emerging here with IBM. Great. You go play it bearish. Where's your stop? Well, here's the parabolic SAR up here. You hold this as long until that switches, right? And it could switch tomorrow. IBM could rally to 144 and it could switch tomorrow, but that's your buffer, right? And if the stock starts to fall further, that buffer is going to follow it and act as a trailing stop. That's the story behind the ADX RSI parabolic SAR that Wells Wilder put into play. Now, I also mentioned earlier this morning that IBM, I mentioned it yesterday as well, IBM yesterday triggered bearish on the challenge algorithm yesterday morning. The challenge algorithm is looking for these stories. Probability of trend, direction of trend. Is there follow through that's likely, or is it already overbought, oversold? And then where's the stop? It's not using the ADX or the RSI or the parabolic SAR, but it's absolutely using those stories. And why? Because those are 3 of the best stories that you can tell about a stock and about a trade out there in the market. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.